Gupta, beg your pardon, is Senior Portfolio Manager, India Equity Specialist at Manulife Investment Management. Rana, good morning. Great to have you with us here on the program. Appreciate it. Prashant this side. It's getting worse and worse. And, at some point, it will turn. But Delhi kitni dur hai, Rana? That is essentially what people want to know. Are we in for a lot more price damage, time correction? What's your view?
Good morning. Glad to be on your show. Although, the markets are all red and it is easy to be, quite pessimistic about the markets. But I think let's put this fall into some context. The correction really started from October, and since then, markets down about 15%, broader market more than 20%. This includes earning cut over 5-7% and peak correction about 10%. What we are seeing is now that even on the cut EPS, markets have reverted to average valuation, and India's premium to the emerging markets is almost dissipated. It's just a little bit of it left as compared to what it used to trade at. So valuation is average, valuation excesses have gone. So now the growth needs to pick up. With respect to growth, we think that as far as the domestic policymakers are concerned, through tax cut, RBI's measures, through liquidity and otherwise, they're trying to revive growth. But all this is for now not effective due to the bad sentiment and the FPI outflows. Once the FPI outflow stabilizes, I think you will see some of these measures kind of filtering through the system and some sort of stabilization. We think that because the Nifty is at average valuation, price damage has happened, while the confluence of positive that is building up, like policy intervention or a bit of a better recovery in rural, is not getting noticed today. But at the same time, coming out of this will take time. Patience will be required because of global uncertainty and the flows need to stabilize.
So till then, as we navigate through these tough times, what are you doing with your portfolio? As money comes in, where are you deploying it? Or are you sitting on cash right now? And when might, the sentiment in the market turn?
Sure, I think that we have in the view that although the market may stabilize, it will take some time. Market may stabilize before consolidates here, before any advances. But one thing we have been clear for some time that even when the market bleeding stops and it recovers, the sectors that could lead the market up will be different than what the last bull market has happened. In the last bull market, we saw remarkable results and stock performance from industrials, PSU and utilities companies. I think that is going to change. And we think that next bull market, or whenever the market upturn resumes, it will be led by mostly consumer and financial stocks. Even within financials, we like the non-banking financials more than most of the banks.
Okay, all right. So you're looking at the NBFCs?
That's right.
I guess cost of borrowing as well will come down with these rate cuts, and the valuation wise as well, they had come to pretty attractive levels. The other space, Rana, that you liked is the EMS space. I think we briefly spoke about it in the past.
Correct.
You were looking at some rural themes as well. So if you could give us the top two themes that you're looking at. The EMS space, by the way, has seen a big correction from the peak. Though in the longer term, runway is still there, and they have a lot of growth that's ahead of them. The problem was valuations, which have now corrected. Will you be positive at this particular juncture?
Sure. To be clear, in the EMS, we are bullish on the EMS ancillaries. May not be the stocks that are leading in market cap. Somewhat lower in market cap. The ancillary EMS is the space that we like. Nonetheless, they have also seen quite a bit of correction. And you are right. I think the long-term runway remains very good. The valuation has corrected. To be fair, I think there has been some project delays as well. But I think going forward, we expect to see a lot of policy response to let the EMS growth resume again. So that is something that we continue to like. In terms of rural, I think after a long time, we are seeing some signs of life in the rural economy. And I think that can be best played through something like a tractor companies, and also the non-bank financial companies, which is exposure to rural segments, particularly in the secured segment. That is also one segment that we like.
Can you just explain that to us, Rana, with regard to the EMS ancillaries? What all comes under that category?
If you think of, let's say, all electronic items, whether it's a mobile phone or your TV or your AC, these are all made of some components, right? So, and you require machining, tooling, CNC machines to make those. So that is the value chain that we like, because if India is going to produce all this internally, a lot of machinery requirement will be there. So that is so companies which is setting up scale to produce this, or the machine that is required to produce this, is one segment that we like.
Got that. So, Rana, the basic broader question is some of the high-flying sectors like EMS you spoke about, defense, manufacturing, industrials. When there was a lot of money coming in, valuations, I guess, were jacked up to extremely high levels. But they are still high. The question, though, is that the new, have we entered a new normal where 50 times, 55 times for companies, without naming, I can, is the new normal? Because valuations actually have been high for almost 10 years now, 10 plus years. They had gone to 70, 80 times. Now they're back at 50, 55 times. What is your sense, Rana? Or you think that will depend on where interest rates head?
I think on valuation, if you go into sector and stock specific levels, it's very clear that Indian markets rewards the companies that can show earning growth. In general, also, if you take a step back and look at the flows into the market, particularly from the FPIs, it has happened either when the valuation was low, less than 2020 when COVID correction happened, or something like 2023 when the earning momentum was very high. So I think broader point is, even if you go to the sector level, the companies which can deliver earnings, they will be rewarded, and the valuation tends to overextend, and when the earning growth cracks, valuation reverses. I think so. Getting the earning growth right will be the main thing. I think the companies which can maintain good earning growth much ahead of the industry, they will continue to trade at premium valuation, and the companies which cannot maintain the earning growth will suffer valuation correction. So I think for us, getting the earning growth right within the segments that we like are very important.
So if a company is, say, growing at 30, 35%, what's the right PE multiple, Rana, in your opinion? That's
So
the top end of the growth. That's the top end of the growth companies, right? So what should be?
Yeah. Sure. No, of course. So it will be not, in my view, it will not be right to look at like just a 1 year growth, because when you talk about valuation is about the durability and the sustainability of the growth and how much of cash flows are coming. So 30% growth is fine, but the 30% growth can continue for how long? For example, let's say if you are putting, for example, instance of 50 PE on FY27 based on 30% earning growth, and in FY28 the earning growth dropped to 15 or 20%. I think in that case, one is kind of pretty much sure to make losses. The idea is that whether 30% growth continues for some period of time or not, so that when you exit, even then the growth rate is also quite high. So that is very important, and that is why one has to get into areas which are, relatively speaking, underpenetrated, or the growth runway is very long.
So Rana, what about cables and wires? Now, most of the companies there are likely to grow according to estimates by 15 to 20% over the next 2 to 3 years. So there is growth. But the problem is, after 3 years, once Ultratech Cement comes into the market with its product, so what should one do with stocks in the cables and wires segment? Were you buyers in the first place, and now what are you doing?
See, cables and wires is one segment that we liked because of the companies here are, they're all financial ratios, whether it's earning, whether it's margins, whether it is, growth, ROE, all look good. This industry looked good because, again, talking to what I was just saying, durability of growth, right? So power transmission, when it happens, and because of renewable power investment, a lot of power transmission projects will happen. So within wire and cables, we like the cable side quite a bit, although cable side is a B2B business, but I think the growth runway is long. Now, if some company can top up the cable business with some high margin wire businesses, I think that was quite a good growth combination. That said, we are watching Ultratech's entry into this segment, but their entry is at least 2 to 3 years away, and our own sense is that in 2 to 3 years this industry will grow by 14-15% to accommodate a player like Ultratech, given the kind of capital outlay they have said. However, what we do not know today is that Ultratech, when they come in, will they stop at this kind of 2,000 crore investment, 10,000 crore top line, or whether they want to go more for it. So I think this is one emerging sign that you have to monitor across the mid-cap space. Wherever the mid-cap companies have been really profitable, we are seeing the large conglomerates are entering. You can think about even the cola businesses, right? Where it's now almost large cap company, but where the companies have done very well, the mid-cap companies became large cap companies. There, the giants are now entering. So when we look at mid-cap stocks, we have to be quite, conscious about what kind of competitive threats that they will see going forward. Because at the end of the day, going forward, that can increase competition, and we have to also be very careful about the growth aspiration of the the top rank, the new entrants.
Thank you, Rana, for your conversation. It was a pleasure chatting with you and look forward to the next one. Enjoy the rest of the day. We'll